Okay, let's talk about PayPal. We've all used it, right? But here's the thing. On Wall Street, there's this massive debate going on. Is this fintech giant a sleeping giant about to wake up? Or is it actually a fading star? We're going to dig into a really detailed financial report to figure out what's really going on.
I mean, you see that blue button everywhere. It's become this symbol of trust, right? Super convenient for online shopping. And yet, if you look at its stock price, it has been absolutely hammered. So what is the deal here? How can there be such a huge disconnect between this powerhouse brand and how the market is valuing it?
All right, so before we dive into the whole turnaround story, we've got to understand the other side of the coin. Why is the market so down on PayPal right now? Let's take a look at the bad news that's got everyone so worried.
Okay, so this number right here, this is basically the engine of PayPal's entire business. It's called total payment volume, or TPV, which is just a fancy way of saying all the money flowing through their system. And well, that engine is slowing down. A drop from 10% growth down to 6%, that's a huge deal. For investors, that's like a warning light flashing on the dashboard of a rocket ship. It feels like it might be running out of fuel. And it's not just the amount of money slowing down. The number of new people actually signing up for PayPal has kind of hit a wall. I mean, look at that, just 2% growth. It's like a super popular nightclub that used to have a line around the block, but now, not so much. The party isn't necessarily over, but that explosive, gotta-be-there growth phase, yeah, that seems to be in the rearview mirror.
Now this is the number that really has the skeptics worried. Because it's not just that fewer new people are signing up, it's that even the loyal existing users are using it less. I mean, think about it for yourself. If you're using PayPal less than you used to, that's a direct hit to their business model. And a 4% drop in how often people transact, that is a big flashing red light.
So when you put all that together, what's the big takeaway for the market? They see a company that's gone from this high-flying, can't-miss tech star to what feels more like a boring, slow-growth utility company. And when that perception shifts, investors just aren't willing to pay that premium price for the stock anymore. Simple as that.
Okay, but this is where the story gets really interesting. The financial report we're breaking down here, it argues that this whole gloomy narrative is only half the picture. It says there's a hidden strength here that the market is completely, totally ignoring.
Yeah, despite all of this talk about a slowdown, PayPal is still an absolute cash-generating monster. We're talking about $700 million in free cash flow in a single quarter. That is the solid financial foundation that the pessimists are just overlooking, and believe me, it gives the company a ton of options.
And this quote from the report, wow, it really just hits the nail on the head. It says, PayPal's being valued like some stodgy old bank or a no-growth industrial company, not the premier global fintech platform that it actually is. That's a massive disconnect, right? And that's exactly where the potential opportunity lies.
So this slide really lays out the two completely different stories being told here. On one side, you have the market's view, slow growth, a fading competitive advantage. But on the other side, the report is screaming, this is a world-class, premier fintech asset that's basically on sale, just because it's hitting a few bumps in the road.
And here, my friends, is the kicker. Just look at how PayPal is valued compared to its competitors. Its price-to-earnings ratio, which is basically how much investors are willing to pay for every dollar of profit, is sitting around 14.5. Now look over at Block and Adyen. They're trading at way, way higher multiples. The market is paying this huge premium for their growth. While it's treating PayPal like it's on its last legs, this is the absolute core of the deep value argument.
But okay, let's not get carried away just yet. The report is also super clear about the risks. And to really understand if this is a genuine opportunity, we have to look at the challenges PayPal is up against. And they are real.
So what's the biggest threat? It's something we've all felt. Checkout friction. Seriously, how many times have you had to stop and try to remember your PayPal password? Now compare that to Apple Pay, where you just glance at your phone and you're done. In the lightning-fast world of e-commerce, that one extra step can literally be the difference between making a sale and someone just giving up and abandoning their cart.
All right, the next risk is a little more under the hood. You can think of PayPal as having two main businesses. You've got the classic blue PayPal button that we all know, which is super profitable for them. But then there's Braintree. That's the engine that processes payments behind the scenes for massive companies like Uber. Now, Braintree is growing way faster, but it's just not as profitable. So the risk is, as Braintree becomes a bigger and bigger piece of the pie, it could actually drag down PayPal's overall profitability over time.
That's what they call structural margin compression. And here's something that should definitely make any investor stop and think. The people who know the company best, the insiders, the executives, they've been selling more stock than they've been buying. A lot more. And what's really notable is that the new CEO hasn't made a big public stock purchase to signal their confidence. You have to ask yourself, if they're not rushing to buy in at these prices, should you be?
So, we've laid out the good and the bad, the bull case and the bear case. The big question now is, what could actually tip the scales here? What could happen to unlock all of that hidden value the report talks about? Well, it identifies a few key catalysts.
When you boil it all down, the bullish thesis for PayPal really rests on three main pillars. First, the stock is just deeply undervalued. Second, you have new leadership that could be a major catalyst for change. And third, there are these hidden assets inside the company that the market just isn't giving them credit for.
So what are these so-called hidden assets? Well, first up is Braintree, that payment processing engine we talked about that's growing like a weed. Then you've got Venmo, the social payment app that everyone uses, which has all this untapped potential to actually make money from commerce. And finally, there's PYUSD, PayPal's own stablecoin. It's basically a long-term bet on the future of digital currency that the market is giving them almost zero value for right now.
And this isn't just some buy it and hope for the best kind of idea. The report actually lays out a pretty clear roadmap of what to watch for. In the short term, say the next 6 months, it's all about their earnings reports and how they perform during the crucial holiday season. Longer term, over the next year or two, the focus shifts to watching for new products to take off and, importantly, seeing if Venmo can finally start contributing meaningfully to the bottom line.
Okay, so after digging through all the numbers, the risks, and the potential catalysts, what's the final verdict? Where does this report land? Well, it comes to a very clear and, frankly, pretty compelling conclusion.
The whole investment case really boils down to these 5 key points. 1, deep value. The stock is cheap. 2, a new leadership team acting as a catalyst. 3, robust free cash flow and share buybacks. 4, those underappreciated assets we just talked about. And 5, and this is the big one, it all adds up to what investors absolutely love to find, an asymmetric risk/reward profile. And asymmetric is really just a fancy Wall Street term for a bet where the potential reward is much, much bigger than the potential risk. The idea is, because the stock has been beaten down so much and is already priced for a ton of bad news, the potential downside from here feels limited, kind of cushioned. But if the turnaround works, even just a little bit, the potential upside could be huge.
So where does that leave us? The report we've just unpacked makes a really strong case that the downside here is limited and the upside is massive. But it all really hinges on one thing: execution. So the real question for any investor looking at this is, do you believe in the turnaround story? Do you believe this new leadership team can actually pull it off? That right there is the multi-billion-dollar question.